Tesla is at the forefront of one of the most transformative technological revolutions in history: autonomous mobility. The integration of AI, robotics, and transportation is setting the stage for a new era, where self-driving vehicles will not only become a reality, but will also dominate the market. One of the most crucial developments in this space is the increasing likelihood that autonomous mobility, particularly robotaxis, will be regulated at the federal level instead of through a patchwork of state-level policies. Since these vehicles will inevitably operate across multiple states, it makes logical sense for national legislation to oversee their deployment, a move that would eliminate regulatory fragmentation and allow companies like Tesla to scale their services much faster. This shift in regulatory approach could be a major catalyst for the adoption of autonomous ride-hailing networks, and Tesla stands to benefit more than any other company. Investors and analysts are now beginning to seriously consider the impact that full self-driving (FSD) technology will have on Tesla's financials. Right now, Tesla's gross margins sit in the mid-teens, primarily due to its vehicle manufacturing and sales model. However, with the rollout of a robo-taxi network, those margins could surge to 60% or even higher. Thanks to the software as a service, SaaS nature of the business, unlike traditional car sales, where revenue is generated through a one-time transaction, an autonomous ride-hailing network generates continuous high-margin revenue every time a ride is taken. This shift from a hardware-focused model to a software-based recurring revenue model could be the single biggest financial transformation Tesla has ever undergone. Beyond autonomy, Tesla's advancements in humanoid robotics are also making waves. As the dexterity of the Optimus robot improves, more industries are beginning to take notice. The ability of Tesla's AI-powered robots to perform complex tasks with increasing efficiency highlights the vast potential of automation in industries ranging from logistics and manufacturing to healthcare and household assistance. Optimus is no longer just a concept. It is evolving into a practical solution for labor shortages, repetitive tasks, and dangerous work environments. The competition in the electric vehicle (EV) space, particularly from China, is intensifying. Chinese automakers have been rapidly advancing their technology and scaling production. However, the U.S. has already implemented high tariffs to protect domestic automakers, preventing an influx of low-cost Chinese EVs. Despite these challenges, Elon Musk remains unconcerned about competition. Tesla's relentless focus on reducing costs while improving efficiency gives it a unique advantage. Even if EV tax credits were eliminated, Tesla would still be profitable due to its superior cost structure. Unlike many traditional automakers that rely heavily on government subsidies, Tesla has positioned itself as a self-sustaining force in the industry. Tesla's growth, however, is not just about selling more EVs. It's about redefining the entire transportation ecosystem through autonomy. As the company transitions into a full-fledged AI-driven technology powerhouse, Seeking Alpha provides comprehensive insights into Tesla's evolving market position, financial projections, and stock trends. Clicking the affiliate link in the description supports the channel while offering exclusive research on Tesla's innovation and future growth potential. The democratization of investing has played a significant role in Tesla's rise. A new generation of retail investors, many of whom entered the market during the pandemic, has actively sought out disruptive companies. Historically, only accredited investors, those meeting strict income or net worth requirements, had access to early-stage private companies. Recognizing this imbalance, investment firms have introduced venture funds that allow a broader audience to participate. Now, individuals can invest in private companies like SpaceX, OpenAI, and Tesla with as little as $500, leveling the playing field for retail investors. Since the most recent election, funds focused on disruptive innovation have significantly outperformed the broader market. This signals confidence that the new administration will support policies that accelerate technological progress and economic growth. Deregulation, tax incentives, and reduced government spending could all contribute to a more business-friendly environment. Over the past few years, regulatory hurdles have slowed progress in several industries, but this trend may soon reverse. Research suggests that excessive regulation has reduced real GDP growth by as much as 6 percentage points, a situation that could be remedied through policy changes that foster innovation rather than stifle it. Elon Musk has long been a vocal advocate for reducing regulatory bottlenecks. His companies have faced numerous bureaucratic hurdles that have slowed their ability to scale and innovate. While he acknowledges the importance of safety regulations, he has also pointed out the disproportionate scrutiny Tesla has received. Despite having some of the safest vehicles on the road, Tesla has been under intense regulatory focus, while the broader auto industry, where over 40,000 people die annually in traffic accidents, has not faced nearly the same level of scrutiny. For investors, the implications of Tesla's robotaxi network cannot be overstated. Many analysts have yet to fully factor autonomy into their financial models, but as regulatory clarity improves, they will be forced to adjust their forecasts. The economics of a robotaxi platform are drastically different from traditional vehicle sales. A software-based ride-hailing service carries gross margins exceeding 80%, far outpacing the 15 to 30% margins seen in traditional EV manufacturing. This shift will dramatically increase Tesla's profitability, making it less dependent on vehicle sales and more reliant on recurring software revenue. The biggest question surrounding Tesla is no longer whether autonomy will happen. It's when and how quickly it will scale. Companies like Waymo have already deployed fully autonomous vehicles in select environments, but Tesla is aiming for a much broader, more scalable approach. The company that can move passengers from point A to point B with the shortest wait times, highest safety, and lowest costs will dominate this market. Given Tesla's massive fleet and data advantage, it is positioned to capture the majority of the market share. The revenue potential from Tesla's autonomous ride-hailing network alone could exceed $4.5 trillion within the next decade. If Tesla executes successfully, this could become one of the most lucrative AI-driven industries in history. Investors who fail to recognize the scale of this transformation risk severely underestimating Tesla's long-term value. One of the key pillars of Tesla's push toward autonomy is safety. The data already proves that Tesla's self-driving capabilities are far superior to human drivers. On average, a vehicle in the US is involved in an accident every 200,000 miles. In contrast, Tesla's vehicles operating with basic autopilot features experience an accident only once every 600,000 miles. With full self-driving, FSD, enabled, even with an older software version, Tesla vehicles have reached 3.2 million miles between accidents. As AI models continue to improve, these numbers will only get better, making it increasingly difficult for regulators to ignore the safety benefits of autonomous technology. The regulatory landscape, once seen as a roadblock, is beginning to shift in Tesla's favor. With traffic fatalities rising due to distracted driving, policymakers are beginning to recognize that AI-driven vehicles could drastically reduce accidents and save lives. Removing human error from the equation is the clearest path toward making roads safer. Tesla's execution in autonomy will define its financial trajectory for the next decade. The company has already begun laying the groundwork for a global ride-hailing network, and with regulatory shifts on the horizon, its vision is becoming more attainable. Analysts who have long ignored the impact of autonomy will soon have no choice but to revise their projections. We are witnessing the rise of the largest AI-driven revolution in history, and Tesla is leading the charge. Whether through robotaxis, humanoid robotics, or AI-powered software, Tesla is shaping the future. The skeptics will continue to doubt, but the data and trajectory are clear. Autonomy is not just a possibility, it is an inevitability, and Tesla is positioned to dominate this new era.